Hi guys, thanks for tuning in to another episode of Nuggets News, or our monthly housing and economy update with our friend Martin North. How are you, Martin?
I'm extremely well, thank you. Good to be back for another month. And boy, what a month it was.
Yeah, we're kind of joking about how crazy the world had got last month, and we'll see what happens in the following month. But maybe we should start on a few of those world news points. And I think some of the things that I'm finding interesting is just this attack on freedom of speech that we're seeing everywhere, and censorship on social media. And we've seen it firsthand. I know I've got strikes in the past for saying the wrong thing. But just in the past week, we've seen the Telegram founder being arrested in France where he'd got a citizenship. And I think more and more people are waking up to the fact that a lot of these things that were conspiratorial a number of years ago are out in the open now, that there are powers that be behind the scenes that are almost above government or a shadow parallel government who are pulling the strings. And so it's a bit of a worry. Mark Zuckerberg of Facebook's come out and said as well that they shouldn't have succumbed to the pressure that they got back in the COVID era and censoring a lot of things that people were trying to say that ended up being true a few years later. So this is the whole reason we have freedom of speech, to allow debate and the truth to surface. But what are your thoughts on all this stuff happening in the social media world? Being a social media influencer yourself, Martin.
Well, it's an interesting question. What is truth, right? And if truth is essentially what the government wants you to think, then I have a problem with that. To my mind, we should be having diversity of views and opinions, and we should be able to make up our own minds about things. Unfortunately, that is getting tougher when, in fact, there is a filtering going on. Sometimes people self-censor. For example, I know people in the mainstream media, in the ABC, for example, who won't touch specific stories because they know that if they do, they're going to get into trouble.
Yeah.
Or another example would be that Senator Jared Rennick recently announced that he was actually going to found his own party. And in fact, I'm interviewing him later in the week on this very fact. The reason is that the noise and opinion around COVID is now being fundamentally questioned, and yet in the mainstream and in government circles, they don't want to talk about it. So you've got to, I think, understand that it is quite hard to get unfiltered, straightforward opinion, straightforward news. And quite often we need to ask about what filters are in place. And, Twitter is actually an interesting, or X is an interesting example where, of course, Elon Musk is essentially saying, well, this should be an open forum. But even there, I'm not sure it's as open as some people think. So it's tough. And wherever you look, governments are trying to control the message, formally through spin doctoring and informally through their own use of social media. And there are a lot of influencers, of course, and many of those influencers are actually being paid under the table as well to say specific things and not say other things. You only have to look at the US election where you've got YouTubes and other channels where people are absolutely pushing one side or another side, but there's no actually good debate about this versus that. It's always this is right and everybody else is wrong. And I have a problem with that. So, as a philosopher, I like to have multiple views, multiple opinions, triangulate them, and then form my own views. And governments get in the way of that sometimes.
Yeah, and I guess the other thing to touch on is RFK now running with Trump is a pretty big. I think it's pretty significant because his views, and he's said pretty openly, even just the past couple of days, I want to look into things like the pandemic, vaccines, chemtrails. These again things that were full on conspiracies 10 or 20 years ago, and RFK saying, "Well, at least can we have a debate and talk about these, whether or not they're true?" I just think it's really interesting watching this, and we have got to be so careful because, as you said, in UK they're already arresting people for saying things that the government don't agree with on social media, and Australia wants to roll out this digital ID for social media. I think it's pretty soon. I think, isn't it, September 1st it comes into effect, and they're saying it might be voluntary and blah blah blah, because I see Australia as almost a testbed for these AUKUS nations where we had the harshest lockdowns and the harshest mandates, and they're probably going to be the harshest here on social media. So pretty worrying times in Australia if they do roll this out and we start seeing people going to jail for even just retweeting something or maybe liking a Facebook post that they deem as, hateful or racist or anything. So, yeah.
No, it's a big deal. So more than 1,000 people have been locked up in the UK because of the association with the riots. Now, I think riots is a bit overstating it. In some cases, no, they're not. But just sharing social media posts, and in fact, they're actually going after people not just in the UK but around the world who actually was part of that resharing process. That's a bit of a concern. Again, I'm not saying that everything on social media is true or right, and there are some really nasty things out there. But as soon as we actually say, well, the government needs to decide what we can see, then I have a major problem.
Yeah. Okie doke. Let's dive into these slides of yours, and starting off with US markets have been on a tear again.
Well, we had this heart attack, right? So over the last month, we had this massive drop, and we'll talk about what caused it in a second. But we're now back up close to all-time highs. And if you look at the next slide, the fear gauge, the VIX also had a massive hiccup and then came back down again. Now, 2 or 3 weeks ago, when there was a trough, everyone was saying, "Oh, the markets are going to crash. The US economy is going to crash." We had jobs data. So the next slide just gives you an example of that. So suddenly there was a big revision to US jobs data. And of course, the other factor that was driving it was the so-called Japan carry trade, which is the next slide, just showing you the significant movements in the yen and how that played out. And of course, a lot of people were borrowing in yen at pretty much no interest rates and were actually investing elsewhere. And suddenly the yen moved, and that created an issue. So all of these things basically hit the markets, and everyone was thinking, oh, it's going to be pretty bad. And there were people calling for 50 basis points emergency rate cuts from the US and all of those weird things. And then, of course, it settled down. Meantime, we had the Reserve Bank in New Zealand cutting interest rates. We have the Bank of England in the UK cutting interest rates for the first time. So the rate cycle is beginning to turn. And then, of course, this last week we had Powell on the next slide at Jackson Hole, basically coming out and saying the time has come to adjust our policy. The direction of travel is clear, but the timing and pace of rate cuts will depend on incoming data, the evolving outlook, and the balance of risks. And so now, of course, the markets are saying, whoopee, the rate cuts are coming, the rate cuts are coming. And the markets are now saying at least one, maybe two, maybe even three or more this year. And more next year. So that's the story, that's the backcloth. And we're now in the situation where the Fed is looking as though it's also going to cut too. Now, of course, the real question is why? Why are rates now being cut? Is it just coming back to a more neutral stance? Or is it because the economies, particularly in the US, are actually under recessionary pressure? And that's really the unknown. So you've got the bulls and the bears battling now over, is this good news because it means that we can actually basically go again on higher market rates? Or is it actually something more serious in terms of job compression, unemployment rising, and valuations perhaps overdone? So this is now going to be the next thing to watch.
Yeah. Okay, so even the equal weighted index is back at record highs.
Yeah, so this is the other thing. So if you look at the high tech sector, and particularly Nvidia is about 7% of the total market at the moment in terms of its move. So we're going to have the Nvidia results coming out later on today, and if those results are significantly below expectations, we could see a significant drop. The reverse is true. But actually what's happened is that the markets have broadened. So in fact, what we're seeing now is the equal weights index moving to all-time highs, which is quite interesting. But it is just worth noting the fact that if you look at the price earnings ratio, it's 21 times across the market at the moment. The long-term average is 15.7%. And okay, you can argue that some of this is to do with AI and the tech sector. But you've got to ask the question, is this overvalued? And it really comes to the question of, well, what's going to happen to the economy? If the US economy is going to continue to go ahead quite strongly, and some of the results from the results season were pretty good, then that's fine. But it does look as though in the US, some consumers are finding it quite difficult. Some of the reports, particularly from some of the retailers, for example, were much less strong. And here's the real clincher. If you go to the next slide, what you can see there is that every time, pretty much, the Federal Reserve has started to cut, markets have corrected. The average actually over the sort of the last 5 or 6 times is 23% down, and in some cases more, some cases less. So when the Fed pivots, that is an indication potentially of market weakness. And look, it could well be that we are going to see earnings easing back, because if we are seeing a bit of a recessionary trends, unemployment rising, etc., in the US, that could actually mean lower earnings. If earnings are lower, that means that market valuations are way too high, and that means that the market needs taking out of that. So that's one side of the equation. The other side of the equation is different. This time we've got AI. We're still in a relatively tight interest rate environment, and one of the big debates, of course, is what our star is, which is what is the neutral rate. What is the rate at which interest rates neither boost nor weaken growth? And nobody quite knows where that is. So we're feeling our way towards our star. It's probably above 3 rather than below 3, which is what the Fed thinks at the moment. But my warning is, actually, when the Fed starts to cut, and they probably will in September, expect markets to fall.
Yeah, I tend to think it's going to be pretty choppy up until we get a clearer result of who's going to win the election, even if it's just because whoever wins that is going to change where you want to put your money so much with their differing policies. So I think you might see people just taking a few more chips off the table and raising cash levels depending on who they think is going to get elected. I guess that's my gut feel for the next couple of months.
Yeah, I think volatility is absolutely in the mix at the moment, and we're going to see people swinging from one side of the boat to the other side of the boat. There's a recession iceberg over there, panic, or no, everything's fine, it's all sunny, and we'll go the other way. So it's interesting. There's a lot of money held by investors out of the financial markets at the moment, and in short-term funds where they can get 5% or whatever, because there's a level of uncertainty among investors, and I think we're seeing that. And the risks ahead, if you just go through them, we've obviously got September and October generally are weak months for the markets. If you look at where crashes have happened, they often happen in September and October. We've also got the US election, and as you say, there are some significant differences between the two parties. I would also make the point that in some cases the differences are being overdone. So both sides of politics are sort of thinking about tariffs, particularly to do with China. By the way, Canada imposed EV tariffs on China very recently as well. We've also got geopolitics, things like Ukraine, the Middle East, China, Taiwan, all of those things. The BRICS is having a bit of a go at the moment, and there's some meetings going on there to continue to propagate alternatives to the US dollar. So all of those things are in the mix. I don't think anybody can call how this is going to shake out over the next 3 to 6 months. And so expect volatility, expect uncertainty. And I think the only thing we can be certain about is uncertainty.
Yeah, and the only thing I'd probably add to that list is Europe, where we've seen the riots and immigration. We've seen some countries start to take a tougher stance, or even stop immigration, or even look to reverse it maybe. So this is really becoming a hotly debated topic that raises the emotions of people.
Yeah, well, in the UK, they've basically said, well, what we're going to do is we're not going to just chuck people out of the country who come in illegally. This is what the previous government's trying to do. We're actually going to have to handle them. And that means in some cases, finding them places to live. So there's a real uproar here now where effectively some people are saying, well, hang on a moment, is it true that some of these migrants who came in through nefarious means are now being offered housing ahead of people in the UK? It's a weird policy. We have to deal with some of these migratory issues. Of course, in Australia, we've also now got the student caps coming in. So next year, 270,000 rather than 500 and something thousand this year. And of course, the universities are calling poor there. So wherever you look, you've got all this noise and uncertainty. So it's I think it's going to be a bit of a weird time.
Yeah, was there another US state? Was it California or somewhere I'm thinking of that's if for the immigrants they can get home loans with zero down, and they're also giving them some sort of payments and accommodation, all these things that they're giving to immigrants, in that the homeless, people on the street, drug addicts, all these other things that the money could be going to and fixing, looking after your own population. People are starting to say, well, hold on, why are these people that have just come here getting all these benefits and you're not looking after the people that are really battling locally? So some of these things don't make sense to me, how that policy can be effective or fair to everyone.
No, and I think fair for everyone is the interesting question, right? I suppose it depends a little bit on your perspective as to where fairness lies. But if you look at ordinary people in many countries, cost of living is still rising. Inflation may be coming back slightly, but it's still extended compared with 2 or 3 years ago. Incomes have not been growing to the same level. So a lot of people are under pressure. Costs of housing have gone through the roof for all the reasons we know about. And so many people feel that the political class are completely disconnected from reality when it comes to ordinary people and ordinary businesses. And I think that's probably the truth. And so at what point do people say, we've had enough of this? Or do we just roll over again? And in some of the recent experiences in the UK was that people were saying, well, no, actually, there are issues here that we should be talking about. I'll give you another example. In the UK, they just announced a 10% rise in the cost of energy over the October period onwards, and they've withdrawn a lot of the energy support programs that were in place previously. So effectively, a lot of particularly older people are going to find it very tough to pay their energy bills through the next winter season. And this is another classic example of when politicians say one thing before the election and then after the election, oh, it's all much worse than we thought and we can't do what we said we're going to do and we have to do other things. And Starmer made a speech, in fact, just yesterday saying it's going to get really tough for the next 2, 3, 4 years before we can actually get some of these things under control. So once again, what we are seeing is that politicians say one thing before they're elected and then say something else afterwards, yes, and then claim everything's a lot worse. We're in a nutty world.
We are. Okay. So US dollar has just been range bound of late.
Well, it's interesting because, of course, the US dollar's come back. It was quite strong. And now the question is what happens next? And there's a lot of debate, and it's all tied up with are we going to see de-dollarization? Has the role of the dollar effectively gone forever? Or are we going to continue to see the preeminence of the US dollar? Remember, a lot of the US dollars live not in the US, but around the world, euro dollar and those sorts of things. It's almost an uncontrolled and very large market. And just to be clear, if we see a significant move up in the DXY, that could lead to de-dollarization. If we continue to see the rate go the other way, it's more likely to continue the preeminence of the dollar. So in fact, where the dollar sits is actually very important, not just for the US, but for many other countries as well. And also those people who don't believe necessarily that the US dollar is a firm currency that should be effectively grasping the whole financial system globally, which it does pretty much because the majority of transactions are still in US dollars. So this will be a really interesting one to watch.
Yep. Okay. So next up, we've got US interest payments hitting that magical $1 trillion a year mark.
Well, it is just worth standing back and looking at the slide on the right. The global debt, $315 trillion. That's US dollars, 315 trillion. It's gone up and keeps going up. And it's 333% of GDPs. But yeah, with higher interest rates, of course, the costs of that debt is actually huge. And you can see here that the $1 trillion now that the US interest payments have now reached, that's horrible. What that means is that it's basically sucking taxpayer money out to pay the debt, of course, or more likely what they're really doing is actually mortgaging the future even more severely. And the point I've got is that with this amount of debt in the system and with this amount of interest payments now being made, we've got huge instability here. How much longer can it go on for? Probably longer than people think. But at some point, where there are some really hard questions to be asked, and even in the US now, a few people are beginning to question whether the path of greater debt makes any sense at all. They've got some capacity to go even higher, of course, some other countries less so. But this global debt story and the interest rate payment story is one that I think will determine the strategy over the next 1 to 2 years.
Yeah. All right, next up, quantitative tightening.
Yeah, so the point here is, whilst the global debt is going up, it's now not central banks driving it. So if you look at the Bank of England, the ECB, Bank of Japan, they're all, to a more or lesser extent, talking about or actually doing quantitative tightening. So they're actually effectively reducing the size of their balance sheet. That means getting rid of some of the bonds and other assets that they held. In some cases, they're holding to maturity. In some cases, they're not. They're actually selling early. Of course, problem there is a lot of central banks have negative balance sheets as a result of the big bond movements, and that's a significant factor there. Yeah. But if you go to the next slide, if you look at the M2, that's the sort of the money supply in the US, you can see that even with the Fed effectively doing QT, money supply is way up there and it's ticking up again. And that's because, of course, the Treasury in the US is still massively issuing more bonds to fund very large programs in the US, and we're seeing other players around the world. So the debt bomb is still expanding, even if the central banks are actually going into QT.
Yeah, so just to drive that point home that Martin's talking about. So if you think of this as the total money supply, while the central banks are talking about unwinding it and reversing what we've done in the past, blah blah blah, I think it's important to say that this is almost the best they can do now is put things on pause and go sideways for a little bit while they have all these other exotic policies that no, this isn't QA or this bailout or we're going to guarantee the bonds that are sitting on banks' balance sheets at a loss. All these things that are trying to patch the holes of the water spilling out before we take off on the next big debt binge. But as we saw those numbers, it's really getting to the point now where people are saying this is falling apart, this is unsustainable. It's not something that's 10 or 20 years away now. We need to talk about it.
Well, how sustainable it is the question. And of course, it amazes me that governments around the world seem quite happy just to mortgage the future even more and more. But to be clear, future generations are going to have to pay one way or the other. Now, if they go on issuing more and more debt, that means that effectively more and more debt needs to be serviced. And that means that there's less money available to do other things like healthcare and those things. Or if somebody says, well, we're going to start paying down the debt, well, that is a lot of debt to try and pay down. And just go to the next slide. It's worth understanding this. If you look at where what's called the money pyramid is, the claims on the monetary base. So you've got gold there, that little tip, which is sort of, at least linked to something. And then you've got the paper money above that. And then you got the government bonds and treasury bills above that. And then you've got the corporate and the other bonds and the securitized debt and the listed stocks. And then you've got the non-monetary commodities and private business and real estate, which is a massive. But the biggest is actually derivatives and the unfunded government liabilities. That's where a lot of the problem is in terms of the size of the problem. And what we can see here is that this is a very unstable pyramid, right? It's on a very small base. And that's why a lot of people are questioning to what extent the whole monetary system is actually going to be able to actually continue in a stable state, or are we going to get more wobbles and more difficulties? And that's one of the reasons why, of course, the gold price is now at 2,500 US. That's pretty much all-time high. China and some other countries are buying up gold big. So there's a question about what do we use as the cornerstone of the financial system, which of course takes us then into, well, what about some digital alternatives, for example, which is another angle that some people are exploring.
Yeah, and I was going to say the smaller text here is hard to see, but that derivatives is in the 1 to 2 quadrillion range. So we're talking trillion dollars. So for me, it's always been this race of these fake money derivatives and obligations and IOUs. At the end of the day, it's always going to rush for something that's real. Whether that's gold, I really think you could put almost all assets in that tip in terms of people are going to rush for real estate or anything real, oil, commodities. This is where I think we can see a lot of inflation when the system collapses. And obviously crypto believers say, well, hold on, Bitcoin's also scarce and finite and it has basically no risk of default. No one else is the counterparty if you're holding it yourself and that sort of thing. So interesting times.
Yeah, let me just pick you on one point. Real estate, of course, is in that triangle further up because the value of real estate is directly linked to the devaluation of dollars and other currencies, right? Yeah. So, in fact, the reason that there hasn't been an asset explosion is not necessarily because assets are really worth a lot more. It just means that the value of the dollars and other currencies over the last 20 to 30, 40, 50 years have been devalued and devalued and devalued and devalued. And when I talk about high home prices, what we're really talking about is low value of the dollar.
Yes.
And that's the cause of the problem. Why? Because, of course, all of the money printing, because of all of the massive quantitative easing that happened, ultra low interest rates, government stimulus, all of those things. So it's very interesting that back to Jackson Hole, Chair Powell said that supply shocks drove inflation. No, it didn't. It was one of the factors, but the biggest factor was this massive money printing, quantitative easing, government support. No surprise at all that we had massive inflation. And I can't believe that central banks are still in denial that they caused it in the first place.
Yeah. No, so I should clarify that a bit more. I think what I'm getting at there with real assets, Martin, when I say real estate, is I think more and more people are seeing something like a bit of land, maybe out of the city, where you can maybe grow some of your own food, collect some of your own
Yeah.
water. Like, what value can you put on that compared to, yeah, I agree, like a house or an apartment in the city? It's a completely different way to value it. But people want something that's real and can, if times get tough, they want to know that they're safe and that type of thing. So I think that's becoming the dream for a lot of people now.
Spot on. Well, talking about times getting tough, let's talk about China briefly. So China's economy is still struggling. There's a lot of issues with tariffs, as I mentioned, but one of the really interesting developments over this last month was that China has suspended steel plant approvals, um, basically because there's a demand slump and they can't find a way to export it. The world's second largest economy has grappled with weak consumer demand and the prolonged property slowdown, prompting greater intervention from policymakers in recent months to try and shore up confidence. But the consequences of this is dramatic, particularly for Australia. And if you go to the next slide, you can see there that the harsh winter for China is going to cause economic pain for Australia. The plunging iron ore price could leave a $3 billion hole in the federal budget. It's collapsed significantly, down about 30% over the year. And interestingly, and the point I want to highlight, isn't just the big miners that are actually catching a cold here. The impact of China's economic slowdown was not just felt in the commodity markets, but shares in A2 milk, for example, one of the largest suppliers of infant milk formula to China, plunged by more than 18% on Monday. And that's the point. There's a really significant fallout. So we've been very reliant in Australia on China and trying to trade and, of course, the iron ore price. So this is something which is very, very significant and important to watch, because the impact for the local economy in Australia is actually very significant in my view.
Absolutely. Okay, so the RBA holding firm for now, and there's been a lot of commentary about the RBA on Twitter recently.
Absolutely. So we can spend the whole show talking about the RBA. But look, the fact is they came out and said inflation's too high. We look through some of the government handouts and support. So the headline inflation dropped a little bit because of the electricity support, but they're not looking at that. They're looking at the underlying. They're expecting that interest rates will have to stay higher for this year into next year. Markets still think there's going to be a cut. Who knows? But the Reserve Bank is quite stuck now, insofar that it's one of the few central banks that really has no chance in the short term to cut rates. And of course, if the Fed does cut in September, that's going to put more pressure on. The reason is that local inflation is there. Some of it's to do with the recent decisions that the government took in terms of the programs to support the economy. Guess what? $40 billion of tax cuts and other stimulus measures from the government is inflationary. And in fact, the RBA all but said that. And if you go to the next slide, you can see there that Christopher Joy is, of course, all over this, highlighting the fact that house prices in Australia are significantly higher. We've got taxation issues in Victoria, squeezing Victorian people migrating to interstate. The Michelle government talked about where rates are going, so effectively giving some forward guidance without officially giving forward guidance. So where's that going? And of course, he's been talking about the fact that there's a really big contention now between what the RBA is trying to do and what the government is trying to do. The government, of course, is saying, well, we're trying to bear down on inflation, when in fact they're doing strategies that are actually creating inflationary pressures. Yeah. And the RBA is looking through those short-term support measures. So underlying inflation, it came down just slightly, looking at the most recent data that came out overnight. And interestingly, there you can see that the energy relief was one of the reasons why inflation dropped. That's the monthly data. Yeah. So we are in a very significant problem at the moment. China slowing, recessionary pressures building, inflation still high, RBA a bit caught, and frankly, I think they've muffed it again.
Yeah. Alrighty. So, anything to add here, Martin?
So just quickly to say, if you look at the household debt to disposable income, everyone is talking about Canada's a bit of a basket case. Australia is the prize, though. We are so leveraged, and this is one of the reasons why the Reserve Bank has been very quiet on terms of keeping rates lower than other players around the world, because they know the debt pressure on households. The problem is the debt to income ratio, household debt, is huge. And that's going to create another problem for the RBA. And then, of course, then the question becomes, well, what's going to happen in terms of ahead? If prices on interest rates are going to stay higher for longer, how's that going to catch people? And we're starting to see some signs of home price weakness in some areas. So, for example, the most recent auction clearance rates were a little bit weaker than some expected, particularly in some geographies. And the clearance rates were down a little bit. There are more properties now coming on the market, and so expectations now have been moderating about where prices may go. That said, of course, home prices have been quite strong. In Perth, in particular, it's very, very strong at the moment, ridiculously strong. In Melbourne, of course, prices are still going backwards. And going back directly to what I said before about what Christopher Joy said, guess what? People are actually still running away from Melbourne. Some investment properties are actually coming on the market. And people are worrying about the economy, particularly in Melbourne at the moment. My point is, we can't necessarily expect this strength in house prices to continue, given all those external factors we've been talking about.
And some places are cheaper than a decade ago, but I'd say that's fairly few and far between.
Yeah, well, I mean, it's like in everything. You can always find a data point to prove whatever point you want to make. But this was an interesting article because it made the point that in some areas, over the last decade, prices have gone absolutely nowhere. And that includes quite a lot of units in a number of areas, some houses in some of the outer suburban areas too. And that may be because of some of the different changes of mix of property over that time. But it is interesting that this story that everything's going up everywhere, which is what the mainstream has been pushing, is way too unsophisticated for what's actually happening. Sure, there are areas where prices are very strong, particularly in houses, particularly in the West. But in other areas, not so much. Oh, and by the way, if you want to give another angle on that, if you look at the story about the high-rise sector, so a lot of builders are actually struggling to build high-rise at the moment, but they're also struggling to let those high-rises. So this was an article saying that landlords are being offered, landlords are offering 1 month's rent or something to try and get people to take those properties. There's a lot of vacancies in some of these new high-rise developments that everyone's thinking is going to solve the housing sector problem. I'm a little bit skeptical of that, and some of it is because rents are still relatively high relative to income, and again, the inflation numbers that came out today showed there was a little bit of an easing back, but not dramatically so.
Yeah.
And more broadly, if you look at the other story here, you've got things like the power bills are still very high. We've got the hardships for power spiking, so we had 35,000 40% rise in the number of customers looking for help about their power. That's significant. Others are being forced to get a second job, as one of the articles showed here. We're seeing that in our surveys, quite a lot of people, because frankly, if you are not seeing your income rising and your cost of living continues to rise, what can you do? Well, you can try and find another job. And so more people are getting second jobs. And that, of course, puts more pressure on those and then their families. Another factor to bear in mind is that the insurance costs are continuing to rise. That's one of the biggest inflationary factors. We're seeing that coming through again. So a lot of people are really struggling to make ends meet at the moment, even now. There are others doing well, and not everybody's in the same boat, but a lot of people are finding it difficult. Now, in that context, I just want to make a point that a lot of renters are really struggling, and some people have tried to use the official processes to try and get some help. And so this article was stunning when it came out and said there was just one penalty notice issued to a landlord about excessive rents in the last financial year, despite formal complaints to the state government storing. 2 other letters were actually issued. This is the New South Wales Fair Trading. There's 200 complaints over the last 12 months with excessive rent increases, but it's the tip of the iceberg. And that's the point. A lot of people are not even bothering to make a fuss about rising rents. That's a problem. Rents are really soaring still, and I'm skeptical as to whether the reduction of students we mentioned earlier on is going to have any major impact on the rental situation, because there's such significant demand at the moment.
Yeah, it's crazy, and I do feel for people. And another thing we saw after COVID was that move away from the city, and we've seen the measures being put in place to try and attract people back into cities. But like we discussed before, a lot of people don't want that lifestyle anymore. So all these things are still, I guess, finding their new equilibrium as we move forward.
Absolutely. And in the last 3 slides, I just wanted to give you 3 little insights, which I think give you a little bit of a flavor of if you like, a contrast between what people are saying in reality. The first one relates to CBA. So CBA came out and said that they're reducing some of their interest rates on new owner-occupied borrowers, 0.25% down if you've got a 20% deposit. Now, that may sound interesting. And by the way, the banks are actually squeezing term deposits now to try and actually create capacity to lend as they go into the spring selling season. But it's just worth noting that CBA has tended to have premium rates on its mortgages, but then actually, when you actually negotiate with them, they'll wriggle a bit and give you a better rate. So I think this is more to do with marketing spin than reality, and I don't regard it as a major sea change in the mortgage industry. So that's the first sort of interesting gap between reality and what the media has been talking about. The second one is this one here. So there was a very interesting set of surveys run talking to leading economists about basically what's wrong with the housing sector and what needs to be done. And it's fascinating that the mainstream economists that they surveyed, only 6% rated immigration as one of the critical levers that should be addressed. That's fascinating. They're talking about planning restrictions or more public housing or tighten negative gearing, capital gains concessions, and maybe reducing stamp duty. All of those things are sort of interesting. But the migration one, which is the critical one, we've had massive migration in Australia, and that's one of the reasons why the demand-supply equilibrium is all over the place. The mainstream economists want nothing to do with it, and that's what we're seeing in a lot of the press, that people don't want to talk about this. But for me, this is one of the things that should be being spoken about.
Yeah, it's just a no-brainer. When you increase your population by 5% in 18 months, the basics of supply and demand, how can that not be one of the main drivers of price inflation? But anyway.
It's absolutely astonishing. But, pretty much all the mainstream economists say, oh, no, immigration's fine. And by the way, the Greens are still saying, mass immigration's fine too. It's nuts. And then the final one, and this was just worth spending just a moment or two on, the the RBA. We mentioned the RBA earlier on, but Andrew Hauser, the new deputy governor, a Brit actually, has come to Australia, made a very interesting speech, and he basically, he told the audience that they should be aware of false prophets, those people who make predictions about where interest rates are going. And he was definitely, throwing bricks at the mainstream economists and the mainstream media in Australia. And boy, did that create a reaction. So we had Christopher Joy and a few other people saying, no, actually, we should be having these debates. And, the RBA got it wrong. It's not the economists getting it wrong. But, there's a really interesting point that I think I want to highlight. What he was actually saying was, there is massive amounts of uncertainty out there at the moment. It's really, really hard to try and figure out what's going on. So maybe it's not surprising that sometimes the RBA forecasting isn't very accurate. And of course, it's not been very accurate. They left rates too high for too long. They then cut rates too dramatically. They didn't respond when inflation started to get away. So, pretty much every time the RBA has done the wrong thing. And what he was basically saying is we need to be humble and, maybe we don't always get it right. Now, I have a feeling that some of the economists out there should be actually taking some of that on board, saying, well, we should be a bit more humble, because there are so many things that are uncertain at the moment. We've touched on a lot this evening. And the bottom line is this. It's very hard to make a clear call about where things may be going. I think it's very interesting that Bernanke's review of the Bank of England said people should be running with multiple different scenarios about how things can play out, because nobody knows. Nobody can actually be clear about how all of these factors play out. And therefore, anybody who says definitively interest rates are going to get cut in the next 2 months or 3 months, or rates are going to go higher, or house prices are going to go up or down, it all depends. And so I want to leave you with this thought, Alex. The uncertainty principle is one that's really important. There are so many factors here, all interlinked, all pushing in different directions. It's very hard, whether you're a central bank, an economist, or an ordinary person, to try and work out precisely how this is all going to play out. Yeah. So what you need to do is you need to basically have a little bit of a sense of, if this happens, I might do that. If that happens, I might do this. Have a series of scenarios, rather than trying to sort of pin your tail on the donkey and say, I know for sure what's going to happen over the next year.
Yes, absolutely. And I'm looking forward to that interview with Senator Rennack, one of my favourites I follow on Twitter, Martin. If you're having him on your show, I'll make sure I share that one on Twitter for you as well. But
that'd be great. Yeah, we'll hopefully be on Friday. Looking forward to it.
Awesome. Well, guys, I hope you've enjoyed that chat. As always, we'll see Martin next month. All the links to follow his stuff down below, and all the links to follow my stuff and our crypto research down below too. Otherwise, we'll see you next month, Martin. Cheers.
Take care.